Wednesdays are going to go down as my worst day of the week for the month of December. Last Wednesday, I had my biggest loss of the entire year. And here we are just a week later, and it's another big red day. I'm red on three out of the three stocks I traded. I'm a little frustrated. I'm reflecting already that there are some things I should have done differently today. So in this episode, we're going to kind of unpack the trading that I did this morning, look at where things went wrong, how I dug myself the hole that I've dug, and well, basically where that positions me now for the rest of the week, the rest of the month, no, the rest of the year. We only have 10, 11 days left in the year and fewer trading days. So let's get organized and jump onto screen share. I'll show you basically my P&L, so sort of the way it looks right now. So this is my last 90 days, as you can see right here, have been grinding up nicely, making some good progress. I did have this drawdown here in November, which was about $20,000, and then came back up, dipped down a little bit, came back up, and then this was the loss I had last week, a $10,000 loss right here. So from 187,000 down to 177,000. And then I had two sort of sideways days. So if we zoom in on that, what it basically looks like was progress, progress, and then I lost 10 grand. And then the next day I lost another 1,700. And then on Friday, I made 1,700. And then on Monday, I made like 600. So basically made nothing. And then Tuesday, I made 1 penny or lost a penny. If you saw my recap yesterday, you'll see how I was taking that one trade just to show you guys. And now today, I'm down another, boom, 10 grand. All right. So this is a problem because what am I doing? I'm stair stepping down. That's exactly what I said I don't want to do. I want to be flat, plateauing, sort of going flat and then curling back up. So what I was hoping was that I'd be able to manage this drawdown without a second leg down, and I'd be able to have, a couple more sideways days. And then once I'd made back about half the loss, I could start to step up to the plate and get more aggressive. Well, unfortunately, now I've dug the hole twice as deep. So now the teeny bit of progress I made is gone, and I'm back to down here, this was minus 10K, this was minus 9K, well, but then there was $2,000 of profit. So now I'm down like $17,000, plus or minus, more or less. And that's a drawdown. It's two steps down. So now, in order for me to get back to the point where I can start to step up to the plate, I need to make back more like $9,000. And realistically, since my daily goal is 5 grand, that's two really good days. So now the drawdown is getting a little bit bigger and a little bit more extended. Now, even though I put myself into trader rehab on Monday, I was disciplined. I was like, I'm only going to trade good quality setups. There was basically nothing. I made 600 bucks on a small trade, nothing too exciting. Tuesday, there was nothing as well. And then today, to be honest, I think I sat down feeling antsy, feeling like I need to make some progress. I need to trade something. And so I broke the ice fairly early with my first trade on LGVN. All right, so here's my P&L. You can see it right here. So my first trade of the day was a $432 loss on LGVN. LGVN hits the scanners. It was squeezing up, as you can see in this candle right here. It goes from $2 all the way up to $3.08. And then it came all the way back down, and now it's at $1.68. That's pretty bad. All right, so on this trade, I bought a dip. I bought the dip at $2.77 right here, which was about $2.70, which was a dip off of volume weighted average price. So my thinking was I'll catch a bounce off VWAP, and that should be good for 10, 15 cents, maybe more. Did 3,000 shares and it flushed. And so I stopped out of that with a, 13, 14 cent loss, down $432. It didn't bounce. It just broke VWAP. I thought it was going to bounce. It did not bounce. All right, so being red 400 is no big deal. Then LQR comes up. LQR hits the scanners, and this is another look at this total move, right? Up and then all the way back down. All right, so you're seeing a pattern. Okay, so on this one, I took my first trade. Let's see, let me look back. So I took my first trade at $5.36, which was right a dip in this area here. It pops up, it dips down. I bought this dip here, and as it squeezed up to 650, I made $2,000. I was up over $2,000 on LQR. I then proceeded to give back all of those gains and dig myself a hole on the stock. So let me go to the 10-second chart so we can look in a bit more detail. All right, so I did two things that were a little bit aggressive, and both of them were losses. So my first trade was like right in this area on this pullback, and this was a good trade. And then I did a dip trade right here at about 625. I was looking for the curl up through the high. And I took that trade with 10,000 shares. And at that time, I was up $2,000 and stopped out. And I went to break even on the stock. That's frustrating. Then, not a minute later, it comes right back up to 225. I got back in at this time 235 with 10,000 shares. I was looking for the break of 635. I was looking for the break of 650, and I added somewhere up in this area, and then it drops. I stopped out on this candle here, and I stopped out at about $6. So 10,000 shares, 30-cent loss is $3,000. So boom, I'm red 3,000 on LQR. It happens fast. I went from up 3,000 or 2,000 on it to down 3,000 on it. That's a big swing, and it happened in two losses. It happened right here, and it happened, right in here. So a real shame. I went from green to red. Now, going from green to red for a lot of people, it's a trigger, and it is for me as well. The, you know, I could have now. What time was this? This was at 8:58 that I went from green to red. So at 8:58, I could have at that point said, I'm going to stop here, break even on the day. And in hindsight, I'd have $10,000 more in my pocket than I have right now. So in hindsight, that would have been the right move. I have a rule that if I give back half my profit, I'll walk away. But I really only follow that once I hit my daily goal. Being up 2,000 and giving back 1,000, it's usually not quite enough that I feel like I should walk away. But today, I think what I underestimated was how easy it was to get triggered. My fuse is shorter because I'm already dealing with the frustration of being in a drawdown. So, a $2,000 green day, if we went back to sort of this drawing here, another $2,000 green day, I would have been right up here, right? So now it's like, okay, you're doing great, man. You're almost out of the hole. And then to have that go back to flat is frustrating. And then even more frustrating for it to now go, down like this. So this is a place, this whole area where emotions are running higher. And I fell victim to that today. So I took the second trade I took on LQR, that 10,000 share position at 625. That was aggressive. That was pushing it. That was pretty aggressive. And I lost $3,000 on it or whatever it was. And then I got right back in basically the same price that I was in before, even a little higher. And then I lost another $3,000. Now I'm really triggered. And this is where things got bad. All right, so now I'm triggered. And when ADIL pops up on the scan, and as soon as I saw it hitting the scan, it dipped for a second, and I got in right here at about $2. I got in at $2, and I bought 10,000 shares of it. So now I'm punching with bigger orders, and it pops up here to 220, pops up here for a second to 220, and then flushes to $1.50. Look at that. And I actually had added a little higher when it started to pop up. So there you go. That's how it happens. That's how fast it happens right there. Once again, I think that trade was a bit impulsive. I was feeling frustrated. I was already feeling triggered from just having had this bad trade on LQR, from feeling this sort of frustration of being in the hole. And when I'm feeling that frustration, that desperation, I see something else pop up and I can be quick to jump on it. I'm like, oh, I'll jump on this. This looks good. This was going to be the one that bails me out, right? And many of you probably can relate to this. You've probably experienced this in your own trading. So even after all these years of trading, I still have these feelings. They don't go away. What gets better in time is your ability to recognize those feelings and to not act on them, but they can be very sneaky and it can creep up on you. And all of a sudden, next thing you know, you're in a 10,000 share position and it was like, what did I just do? I just made a terrible mistake. And now I'm down $5,000 on this stock. And now I've just, yeah, oh my God, this is really spiraled out of control. And it could be a lot worse. Of course, I could have taken a fourth and a fifth and a sixth trade and be down 20, 30, 40, $50,000 if I wanted to. Stocks continue to trade, but I'm choosing to step back. 3 strikes, you're out, down more than 5,000. For me, I'm just disappointed. I'm disappointed that I didn't have the discipline on my side today. So now I kind of have this issue where I feel like, okay, I have now gone into a second step down, right? This is what I was talking about wanting to avoid. So now I've got this second step down here, and now I'm at this level. Obviously, I do not want to take a third step down and lose another 10 grand next Wednesday or whatever it is. I need to start building back up slow and steady. And unfortunately, at this point, I think it's going to require a bit more um, intervention for me to be able to stay focused on these small goals. It's the whole thing with the trader rehab program that I've talked about and that I teach and that I prescribe to myself because I have these drawdowns and these periods where I get more emotionally activated and I need to put the guardrails on to kind of rein things back in to hold things together. So, the guardrails that I'm putting on have been a share size, but I increased that on, I can't remember what day it was. I think it was Friday because I was trading a cheaper stock. And then today I increased it again on a cheaper stock and let myself go up. And I didn't expect a cheaper stock to drop 50 cents a share, but I need to get better at expecting the unexpected in this market. Okay. So I also, I don't have my hotkeys on. Those are still off my keyboard, but I am being too quick to jump on stocks that are moving up right now. I'm just being too quick to jump on them. And it's so tough because, LQR, I wish I was faster to jump on it because it went from $4 to $6 and I didn't get in until 538. But then the one that I was quick to jump on ends up failing. So, at the end of the day, no reason to fix what's not really broken. Having, and when we're talking about is it broken and what's the grand scheme of things here? This is the grand scheme of things. Okay, red days happen. There's slow patches in the market. Maybe there's not a lot more to read into it. Okay, so this is gonna be another dip down here. But then most likely we're gonna look a few months from now and we're gonna see that maybe I went a little further, but then I, recouped back up because that's just kind of the way it always is. And I've been doing this for a really long time. But I also am a believer in reflecting on the losses, doing a bit of a deep dive, and asking myself if I can make changes to reduce the loss, to reduce how big the drawdown's going to be, right? It's like, you know, why dig yourself a deeper hole, right? If you see someone who's getting stuck and they just start spinning their wheels and they just keep spinning them more and more, it's like you are literally digging yourself a deeper rut into whatever you're stuck in. You're going to make it harder to get out. And that comes sometimes from some fear, some desperation. I don't want to be stuck. Oh no. And then all of a sudden, well, now the situation's a lot worse. So I think for me, it's important for me to look closely at these losses and ask myself, what can I do tomorrow to try to be a little bit of a better trader, to try to keep the losses a little smaller? Now, I may be out tomorrow or Friday. I'm not sure which day. I have something that's going on and I have to attend to it. With my son. Anyways, it's fine, but anyways, I have to do it. So that's gonna be, I don't know which day, if it's Thursday or Friday. So that family is first, but it does mean that I'm probably going to have to sit kind of where I'm at for a day or two. And then, of course, Monday's the holiday. So realistically, I'm not going to make most likely any significant progress on recouping this loss or kind of recentering myself until next week. So now I kind of have to sit with being in the red and being a little uncomfortable, and I think sitting with that discomfort is what has gotten me to a bit of a shorter fuse because I've been sitting with this discomfort for a week. It was a week ago that I had my big red day, and usually I bounce back pretty quickly. So now I've been sitting kind of in the red off my all-time highs for like a week. Now, big picture is $12.4 million of profit being down 10 grand. Who cares? Being down 15, 20 grand, 30 grand, 100 grand, doesn't matter. Yeah, unless you're the type of person like me who's a real numbers person and is kind of a perfectionist and is like, this feels like it just gets under my skin and it's like, no, I need to recoup the loss. That perfectionism, I think, is something I don't like about myself, but it's something I have to be grateful for because it's what's driven me to keep getting better because I'm not satisfied. But even at this place of all the profit I have, a small drawdown, I still have that feeling of it needs to be fixed. That's kind of like it's like a little obsessive compulsive kind of like, but these are some of the attributes that may be negative in other aspects, but it can also become your best friend. And you can harness some of these things to help motivate and propel you as long as you're pointing them in the right direction. So I'd rather harness this OCD or perfectionism towards my trading than towards, lining up the carpet fibers, on the floor in the living room. So at least I've applied it in a somewhat productive way. But but it is tough. And then you can get into this state of overthinking, short fuse, frustrated, and the market doesn't care about any of that. The market is indifferent to your emotions, how you feel. The market's going to do what it does. It's going to be choppy some days, it's going to be really hot other days, and it's up to you to bring your best performance each day. And today, I wasn't able to bring my best performance, and that's frustrating. It's good to be able to reflect that and realize that and articulate it is helpful, but it is a little bit disappointing. So, going into the rest of the week, it's a little uncertain what my schedule is going to look like. So, most likely this week is just kind of a wash coming into Christmas. Next week is probably not going to be a lot better because it's a sort of a holiday week. Market closed on Monday, short week. And then after that, coming into January, that's usually when we're sort of back in the saddle. And actually, I began my trading journey as a New Year's resolution. It was a New Year's resolution that I made that I was going to get up every morning and start studying the market because I felt I saw potential in the market and I wanted to better my life. I wanted to understand the market and see if I could make some money off of it. And that meant at that time that I needed to build it into my schedule and have the discipline to do it. It's kind of like having the discipline to get up early and exercise or something like that. And for me, it was having the discipline to get up and look at those scanners. Well, I wasn't using scanners yet, but to look at the market and try to figure out what's moving today and to just spend a few hours each morning trying to figure it out. So I think there's a lot of people that will do that. And I think coming in January, we're going to see a lot more people in the market. We're going to see a lot more participants. We're going to see more volume. We're going to see bigger movers, higher relative volume. And January usually is a pretty solid month. So, past results, not future results, who knows what next month will be. But at this point, I think a realistic goal for me to end the month of December is to try not to dig the hole deeper. So if I go flat, that would be fine. If I can make a little bit of progress up, that would be fine. Hopefully without too many dips. I just, yeah, I'd like to start to get back up here. I'd like to be able to recoup today's loss, but it's been a week. I didn't make any progress really on recouping that loss. Now a second week to recoup this one and then this one. So, it might not be till the first week of January that I'm back up at my highs. But I like to buy the dip when it comes to trading, and I would buy the dip on my own equity curve if I could invest in it because it has a strong track record of recovering those losses and making moves back to the highs. So a little bit of a grind right now, but this is the game. This is trading. This is what we signed up for. Easy come, easy go. It is risky. My son was asking me today. It was yesterday. We were driving. What did he say? He said, I'm trying to remember. He asked if trading was risky, but well, because I said it's risky. He said, "Why is it risky?" But well, what came up before that? I'm trying to remember. So we were in the car. We were driving south. I remember the sun was like slightly in my eyes. What was it that he asked me? Like trying to remember. Oh, I remember. So he said, so I asked him, what do you want to do when you grow up? I like to ask both my boys this on a somewhat regular basis and get different answers. So for a long, long time, my oldest son has wanted to do shampoo and conditioner as his job. He loves mixing in the shower and shampoo and conditioner. So he's has wanted to run a shampoo and conditioner shop. So I'm like, that's awesome. And then about a year ago, he introduced that he also wanted to do ice cream shop. So it'd be like shampoo, conditioner, and ice cream. I'm like, great. And then he said he wanted to run a museum and have dinosaurs, but still have ice cream, shampoo, and conditioner. So I'm like, okay, this is becoming pretty big, but okay. And so I asked him yesterday, what do you want to do when you grow up? And he says, well, I want to know all the jobs before I decide. And I was like, that's great. That's a great way to think of it. I'd love, yeah, all the jobs. He's like, so what are all the jobs? And I was like, okay, well, so we started kind of going through. We were sort of driving by. So we drove by a high school, and I'm like, there's high school teachers. You could be a teacher. You could be an elementary school, high school, college teacher. And then we drive by the fire station. You could be a firefighter. There's a police station. You could be a police officer. We drive by McDonald's. I was like, yeah, you could be a chef. You could work at McDonald's. Kind of like brushed over that one. And then what do we drive by? I drove by the gas station. I was like, hey, you could work at the gas station. You work behind the register. Grocery store. You could work at the grocery store. And then we went by the investment, some like investment bank, and I was like, oh, you could be a banker, work at the regular bank, or here's the investment bank. They're kind of a trader, kind of like being a trader, but a little less risky. I was like, trading is risky. Uh, and then I was like, just remember, trading is risky. My results aren't typical. Don't blindly follow me or anyone else. And he's like, huh? And I was like, it's just, what's what I say. And he's like, why is trading risky? And I was like, well, I was like, I was like, here's the thing. I don't trade with large amounts of money. Even though I've made a lot of money, I don't trade with large amounts of money. I only have like 100 grand in my trading account right now. You can say only 100 grand, Ross, it's a huge amount of money. Yeah, but I've made over $12 million trading. I don't keep all 12 million in my trading account to take bigger and bigger positions. I diversify my risk because I understand that trading is risky. And I said, well, the thing with trading is that um, what he says, why is it risky? I was like, well, because we're trading things that are very volatile, and the investment banker, he's buying smaller positions, he's going to hold them for a long, long time. But for us, I take relatively larger positions so I can profit from these little moves. And he's like, huh? And I was like, yeah, no, but that's what I do. So it is riskier. Now I can't remember why I started telling you the story. I feel bad. I've led you into this story, but there's no ending. Um, I do apologize. I guess the moral of the story is that trading is risky. This is the game that we signed up for. Even my son knows that. He's 5 years old, and easy come, easy go. That's just the way it is. So right now I'm in a little bit of a drawdown, but big picture, life is good, and the strategy works. It's just a matter of being able to be a little bit better at easing off the throttle and to hold that self-awareness. So when you start to kind of spiral and the losses get bigger, you can recognize it and you can slow down. I do apologize for not bringing that story back around. I just don't remember why I brought it up exactly. Anyways, that's it for me. I hope you have a great day, and I'll see you back at it first thing tomorrow morning. Hopefully tomorrow morning. If I miss a recap, it's because I'm out for the day, but I'll be back probably the next day. Okay, see you soon.